Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's October 4th. Hope you guys having a great morning thus far. We got just a couple items here on the economic calendar to go over, and we'll start off with the weekly jobless claims that we get every Thursday. So last week's we had 214,000, but we had a revision this week that went up 1,000, so it came in at 215. Forecast for this week was at 213,000 people applying for unemployment, and it came in at a very low number at 207,000. So another very good number. We've been getting a lot of these, right around the 200,000 range of late. Last but not least, we got the factory orders. So as you can see, in August it was much better. We had a pullback, or drop of 0.5% in July, and August it was supposed to have a forecast of 2.2, and it came pretty much in line at 2.3%. So factory orders had a little bit of improvement in August, which is obviously good news compared to contraction here. So let's take a look here at the headline news. The stock market is down. They've been reaching highs, like the Dow and the S&P has been reaching new highs. And right now they're just kind of doing pullback. It's kind of more of a, cashing in on profits. It's really no direct reason for it, but they are looking at, as we'll see here in just a bit, on the yields. The yields have been jumping up quite a bit, and it might be enticing some investors to maybe start buying treasuries at the yields that they're currently at, primarily because it's a lot safer institution, and it's at a it's a lot safer, and they don't have the risk as much as equities. And because we're at new heights, they don't know how much further it could go in terms of stock prices rising and stuff. So they may look at the trend ahead, and with the yields that they're currently at, and for the safety. Today we got some Fed members speaking, and that could always, if there's anything that's out of the blue that kind of surprised the markets, that could always disrupt it, move it one way or the other, depending on what's said. Let's go ahead and take a look here at the bond market. The bond market, as you see, we just tanked yesterday. We dropped about 60 basis points, and now we got a new floor of support here, and we're still trying to find that floor of support because we broke below that this morning, and now we're at this new level here, just trying to survive here. So we're down right now about almost about 20 basis points right now. So again, we had a couple of changes of price changes yesterday for the worse, and then today, of course, price is going to come out even worse than yesterday's, being that we're 20 basis points. So from here to here, we almost gained 1 point in terms of, is that 0.8% of points for that no point. So if this was a no point loan right here, now it costs 0.8, almost 1 point to get that same rate. So this kind of tells you how big of a drop that really is here. So on yields, we had a huge drive upwards. As you can see here, we broke above that, which has been a pretty good ceiling of resistance here. It's been kind of helping us out here, but it broke above it pretty convincingly yesterday. Now we're up right about the 320 level. We broke above the 311. Now we're up about 320 right now, and again, we don't know if that's going to be a strong ceiling here at the 321 level here, or if that's going to cave and continue rising as well. Now, I guess if you want to look at the good side of this, is that with the 10-year rising as much as it is, the short term, it's kind of helps out with the flat yield curve that we've been talking about, that people have been concerned about, and possibly going into a negative yield curve. So again, this helps out, rises this where short term has to rise even further to catch up to it to make it a flat yield curve. So if we want to look at any positive, I guess that might be a positive right there, as well as some of those in the stock market may want to look over into the treasuries as an investment. Now, don't look towards foreign investment. A lot of these people, like the ECB, is going to be cutting back this month as well on their purchases of their mortgage securities and treasuries over there. I'm sorry, their bonds and treasuries over in Europe, as they are going to get away from that accommodative state as well. Now, so again, there's a lack of demand out there, and another thing that's a lot of foreign investors are not buying into ours, primarily because the dollar has become so strong that they actually start losing money in the currency exchange rates here. So let's go ahead and take a look. So that pretty much wraps things up. If you guys want to get any changes or updates in the day, just come over to Twitter. You can follow me at Mike Bjork on Twitter, and you can get your updates, market close, different information like that over there as well. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye bye.